Okay, premium members, let's take a look at the market today, and I'm going to give a preview for where I think the market is headed. This is Monday, February 14th. Happy Valentine's Day, ladies. I'm not even going to put out a video for the public, and I'm not even trying to continue to put out videos for the public because it's just not worth my time, because I want to start crying the blues here, but just the way Google and YouTube is, I don't think it's even worth my time. So all you premium members, count yourself blessed. You're the only ones getting these videos, I think, from now on. And now I'll refocus on brand and all that nonsense later. But for now, premium members only are getting this content. So let's look at the S&P 500. These are the March 2022 contracts. The new session's already started for February 15th. /ES, also MES, can be traded. Okay. So I want to talk about a new cycle that I put on here. I actually added a new cycle. It may look a little messy, but I saw something on this daily chart that we're looking at here that kind of stood out. So let's get right into it. First, before we jump into the cycles here, there's 3 different cycles running simultaneously on this daily chart. I'll talk about that in a minute. But before we do that, let's look at these, the 3 indicators, the MACD, the Big Daddy forecast, and the SMI, okay? So you can see the MACDs came up, right, crossed over, ran out of steam. It's touching, trying to cross back over, okay? Trying to head that way. The Big Daddy looks like it's trying to curl and come up, and we may get a bounce here. Okay, SMI still going down for now. But overall, even though we may get a bounce here, okay, may not, I don't know, we'll see. I think the market is absolutely deadsville. I mean, I'm serious. I think that it's the probability is much greater for the market to continue to decline, and I think the market, I've been saying it for at least the last several weeks. I think the market's in for a decline of more than 1,000 points. Again, may not happen all at once. It might be come in a series of flash kind of big downward flash movements. It might be kind of a mundane, just, a little bit at a time. Either way, I think we're in for more than 1,000-point decline from the all-time high. I think, to be honest with you, I think 3,800 points, meaning that's where I think we'll be headed, is easy. So from 48 down to 38, which is not on this chart, it's down here somewhere. I think it's going to happen pretty easy. I think it could be even more. I think we might see as much as a 50% decline in the market from all-time highs, which would put us down in around the 2,400 area. Again, not saying it's going to all happen at once, but I do believe we're going to get a 50% decline, maybe. But at 3,800, I think is like going to be easy. It's easily going to get there. Okay. So we'll talk more about that on the monthly and the weekly, just briefly. But looking at the daily, let's talk about these cycles. So I added this orange cycle in here, this one right here. And the reason I did that is because I saw this right here, this, and they really stood out to me. Okay, these are long. This is a longer cycle. This cycle is about, I don't know what it is exactly. It is 41 trading days long, so it's a pretty big cycle. Okay, that guy right there. And we'll talk about where that is here in a moment, where it's ending up over here, okay? Now, the other cycles are still here. I'm a little bit, this green cycle, it may go away, but for now I'm going to keep it on there. Okay, that's 30 bars, and the little red ones over here are 15 bars. So you got 15, 30, and 40, okay? Now, why do I think this is a big deal, this new mustard-looking, orangey-looking cycle here? Because look where all these cycles end. The red one, the green one, and the orange one. They all end right in the same area. The red cycle's been pretty good. Let me just look at it again. It's been a while since I looked at this. A little off right there. Okay. But it's hitting pretty good. The green cycle actually is maybe just a little early for this here. Okay, that was probably like 2.9, and this was 2.14. Remember, there's a weekend in there, so it's actually pretty closer than you might think. This is a little early, but pretty good on the red one. Okay. So what's the deal? Let's take a look at these three cycles collectively, okay? You've got the orange one that ends March 28th. You got the green one that ends March 22nd. You got the red one that ends March 20th. So they're all ending within like a week or two, these three cycles. So basically, in a nutshell, when I see something like this, I think the third or fourth week of March is going to be huge. Now, I don't know if the price is going to come back up here and then start working its way down into this, or it just continues to falter down into it. I don't know. But right now, anywhere from like 320, let's say all the way out to 4.1, maybe even that first week of April, I think the risk is, I think that I don't know what you want to call risk. I see it as opportunity, because up or down to me is opportunity in the market. Okay. But I think the market's in for a big price decline coming down into that time frame. I think it's a really good probability it's going to happen. So this whole time frame right here, March 20th through about April 1st or 2nd, whatever, that whole area right there is just absolutely ba-boom. It's just going to be, I think it's going to be a significant event. Okay, and then this next one, which if we can look at that next one way out there, I'm not going to scroll over because I have to do a few things, but May 16th, keep track of that one. May 1st and April 29th. Okay, they're all within like 2 weeks of each other. That's out over here somewhere. It's going to be over in this area. So you can take your screenshots, pause the video, go back, get those dates if you want. Okay, let's take a look at the monthly. Oh, one other thing on this daily chart. You can see up here, this is pretty obvious, right? Got a rejection right here and got a rejection right here. That is like classic rejection on the daily chart below the 50-day. This market is I don't like to use doing great or in trouble. I don't really view it that way. I just view the market as opportunity, but I know people look at it that way. So if you want to think down is bad, fine. Then the market's in huge trouble. If that's the way you want to interpret it, fine. I don't really view trading that way, but the market's going this way, guys. It's going to continue to do so. Okay, I won't even get into the whole Federal Reserve lending rate, what they're going to be doing in BlackRock and the insanity that those morons continue to do. But yeah, their influence is obviously in what they're going to be doing with the lending rate is going to continue to impact the market in a negative way. Plus the cycles that are already showing up here, I think that we're just in for some serious price decline. So for me, I think shorting the S&P 500 now all the way through beginning of the summer, middle summer, whatever, somewhere around June, whatever, I think is like easy money. Easy. I think it's easy money. Right up, especially right here on this rejection. Oh my gosh, you could short it right there for June. If there's a June contract, I don't know, maybe it's July, maybe it's May, whatever the contract is for S&P 500 on the futures contracts. I know there's options contracts too. I just would have shorted it. Because there's going to be a lot of money made between now and the summertime. The market's going down, and I have a high confidence the market will be below that number right there. Summertime, significantly below, as in going that way, down. Okay, let's look at let's swing over to the monthly, and I'll change my drawing set here. This hasn't changed. I'm not going to change. It still looks pretty good to me. Very end of June 29th. Now, you don't have to be so dogmatic about this date. Just know late spring, May-ish, out to July, August, whatever. Could be anywhere from spring to like early autumn. That whole few months right there is monster mash, going down. Look at this thing. Look at this divergence. Continues for months on end, for a year. A year and a half, this divergence has been going on in that Big Daddy. Okay, you want to know when the divergence started on the Big Daddy? Officially, I could say it with pretty decent confidence. It started right about there, April of 2021. And then on the SMI, it started, same month. I'm sorry, not same month. My bad. Let me get over here a little bit more. with decent confidence was about October of 2021. So the Big Daddy had divergence in April, and SMI had divergence in October. So they came together in October. In other words, they joined forces, if you will, and they're both going that way while prices were still doing that. You're talking about huge divergence on these indicators. This is a monthly chart. These are some serious, massive time frames. If you want to know what the time frame on this is, that's 78 months. Okay? Huge. These may look like big events right now because this is so inflated and out of control that this looks like it's small, but these were big events. Huge events over periods of, whatever, a year, 9 months, 6 months, 12 months events. This is probably like 6-month event. This one was probably a better part of a year. So I don't really care. Do we get something like that back in 2009, which was huge? It doesn't really matter to me. I don't get caught up in all that. I just know there's something significant coming. And you could bet your bottom dollar, guys and gals, that from May to like September or somewhere in that area, late spring to autumn time, anywhere in that area, okay, is something fairly significant that's coming. And these guys are telling us that's happening already. It's going to come. And I've been talking about how we're going to get down. Remember, this is still rising 50 on the monthly, right? The 50 right now is 3339. So it's rising, but this is coming down. So I don't know, take your pick. If it's quick, then we're looking at 3,700 in December. If you just do the triangle right there. If it plays out a little bit more, gets way over here, then maybe this starts to push over and the 50 starts to flatten out a little bit, right? What y'all want to be watching for is for like really long-term pressure, visualization, is if you see this 50-month moving average, if it starts to flatten out a little bit and starts to curve over, if you get a flat like that, yeah, the jig is up. Now this thing is no longer a rocket ship going that way, but it's going sideways, and that's probably meaning that we have something coming that's going to go down. Okay, so for you investor types, okay, who like to look at things very long term, that's what you want to be looking at, that 50-month. Does it start to flatten out? Okay, the MACD is one of the granddaddy of all indicators. Well, it's telling us, watch out below. Anchors below, boys. The anchors are being dropped. That's what the monthly chart tells me. The stock market is going to continue taking a beating. It's going to get beat down. Way back in August of 2021, I said the market was going to hit all-time high. It was coming. Whatever. All right, let's move on to the weekly. What do we got here? Well, we got failure. We got failure going on. Let me change the drawing set to the weekly. I think that's May 18th or something like that. All right, stay with me here, TD Ameritrade. Yeah, May 8th. So that's May 8th right there. Okay. That's the weekly. Okay, let me go back to the daily for a second. Switch over to that daily drawing chart, and then I'll come back to the weekly. I just want to check something real quick here. Yeah, see, May 16th is the end of this orange cycle. What's this one? May 1st. Aha. Okay. May 1st, May 16th. Okay, keep that in mind. Switch back over to the weekly. Come over here on the weekly. What do we got? May 8th. Okay, so from that perspective, the daily and the weekly, they're in a kind of a loosely interlaced agreement. That first or second week in May, oh yeah. I'm telling you what, I think the market's going to be doing bam, trickle, bam, bam. You're going to get stuff like that, okay? It may not be exactly stair-steppy like this, whatever. It could be more, you might see some flat stuff. You might get a little rally, and then bam. I think you're going to see way more downward pricing on the average coming up all through 2022, or at least through the summertime, than not. Now, this weekly chart, just looking at this price action here, this thing is trying to stay above the 50. Forget about it. I don't think it's going to do it. It ain't going to happen. Forget about it. This looks weak as you know what. This is just weak. That SMI has got no life in it. We're starting to get the old Panama Canal, Suez Canal freighter ship gap going on. Big Daddy says, I don't know everybody else, but we're going this way. I'm telling you right now, this weekly chart is going to break below the 50. And when it does, floodgates, baby. Oh, there might be some bouncy back up to touch the 50, maybe get up a little above it, but I don't think so. And look at this, the 50. It's not there yet, but it's starting to get that little flat looking. I'm going to round off and start going the other way. It hasn't happened yet. Okay, but it's happened on the daily. So I don't think this is going to hold up. Look at this, guys. From all the way back here, look at this. First time since April of whatever that was right there. What was that? June, sorry. Almost July. July of 2020. Okay. And here we are way over here. January of 2022. It's been a long time. So June to June. And not quite June again. So a year, more than a year and a half. And now we've touched and busted through the weekly. For all of you guys and gals out there that are by the dip, you're I don't want to tell you what to do with because this is all opinion, my own opinion only. But I'll just tell you this, you're nuts. There ain't no buy the dip. There's just sell it short and ride it and make a lot of money. That's what this is. This is a trader's market. This is your shorter's dream. That's what this is. This is definitely a trader's time right here. For you investor types that are jitterish, I can't, I won't, blah, blah. Okay, fine, go into fixed income, Don't sweat it. Just buy some good grade corporate bonds and just park your money there and don't sweat it. All right, so what are the dates on the weekly? I think I said May 8th here. A lot of confirmation for that date. Okay, third or fourth week of March looks, third, fourth week of March, maybe a little bit going into April. That whole area looks very vulnerable, like the market's going to come down hard into that. And also May, another 2 months, after that. Well, yeah. Another 5 or 6 weeks after that. So like that first week of May, maybe the second week of May also looks like there's going to be something significant going on. So keep that, make your notes, go back, listen to what I said, pause the video for all the dates. Okay, if you want to know, the next one on the weekly would be way out in August. So let's not put too much credence in that. Let's just stick with this one right up in here. Okay. That first or second week of May looks very vulnerable, and so does the third, fourth week of March, maybe even that first few days of April. Right in there looks very shaky. Okay, let's switch over to the hourly. The chart all the traders want to see, that hourly chart. Okay. So look at this. Hello. Seriously. I should charge $100 for premium memberships. Does it get any better than that? From the time this cycle started right here, all the way over to there, look at this cycle. All the way down into it, and then just we got some chop going on here. I mean, my goodness, how can you not trade that? Look at this. This is how I know when the market's weak. Look at this. Oh, the market's strong. Indicators say it's strong. And then why does it look like it's like a basket full of broken eggs? This market ain't strong. When you got this indicator right here, the MACD below the zero line, by the way, hard, even struggling to get back up to it, and you just got sideways. Yeah, there's more downside to come. Let's look at what this next hourly, 6:55 on February 15th. Well, that would be 6:55. Yeah, okay. So that's tomorrow, right? Because today is Monday. Yeah, today is the 14th. Let me just make sure I got my dates right here. Yeah, so Tuesday, about 7 o'clock, Texas time, so about 2 hours after the market opens. For those that want to know, 2 hours after the U.S. futures market opens, or 7 o'clock Texas time, is the next hourly low. But just I mean, you don't. Here's the thing. In my honest opinion about all this, I don't think you need to worry so much about. I mean, I'm not saying you shouldn't pay attention to that time, but this is already Deadsville. It's just dead. That's just. I mean, unless this thing pops above the 50 really strong and gets going this way, okay, reevaluate. But this market's dead. And I'm not saying you should be careless and when you're trading, but this just looks like to me this market's going nowhere. This is going to come down again, and we'll see what happens tomorrow. Tomorrow's session. Look at this session. There ain't nothing going on that entire session. That was that was opening hour right there. Let's zoom in just a little bit here. Clear out the screen here. So this was the opening hour on Sunday night right there. And look at this market. It didn't do anything. It got smashed. Smash, smash, smash. There was no upside to the market. None. You could just short that from right there and just sit there and wait for opportunity. And I think more of that is going to be going on. This does not look like a strong market to me at all. Now, if you want to be a little patient, just see what this thing does here. See if it pops above it. But I don't think it's going to be long-lived. Okay. And that's that 7 o'clock Tuesday night. Yep. Okay, if you want to know what the next hourly one after that is, February 17th, 5 p.m. So right at the opening bell for futures now, not intraday. So 5 p.m. Texas time, February 17th. That's the next hourly cycle that's off the edge of this chart going that way. If you want to know how long these hourly cycles are, so you can start charting your own, 46 bars. Okay. Got someone trying to call me right now, but I'm just going to have to take the call later. So there you go. That's what's going on with the hourly. I don't think this market's very strong at all. It continues to look weak to me. I think this market's in pretty big trouble. Market's in pretty big trouble. To the downside. There, of course, markets will always do what they do up and down, but on the long haul, I think there's so much shorting opportunity between now and summertime. Forget about it. You could literally do it a swing trade. I think you could do it if you can hold on to, and have that kind of leverage against your margin. I think you could take some fairly sizable positions and just hold it all the way through summer. If you're that type of trader, if you're an investor, okay. If you're a swing trader, okay, you're looking for opportunities that are maybe in weeks rather, days and weeks rather than months long. Okay, but any decent rejection on the daily chart for you swing traders, any decent rejection like that, okay, if I can get this thing to play nice, right there, got rejected, heck yeah, short the heck out of it. Why not? So this whole thing here. Okay, we're looking at let me get back to the daily drawing set. But this whole thing, look at that. It's all below the 50. All of that. Weeks upon weeks. 2-3 weeks below the 50, whatever it's been. More than 2-3 weeks. Maybe however long that's been. What? I don't know what this was. February 15th, January 18th. Okay, a month. An entire month. The stock market's been below the 50-day moving average for an entire month. And it's not going to recover. It's not going to do some miracle, we're going to the moon. Them days are over. At least for quite some time. We are not going to break through all-time new highs. Not between now and summertime. Ain't going to happen. And if I'm wrong, fine. I have no problem being wrong. But everything tells me here, the jig is up. The free money is gone. All the game, of course, the Federal Reserve are going to do their games. Boneheads. Once again, manipulators who are buying stock and doing all that stuff while they're pretending like they're saving the world and they're lying in their pockets. You know, these guys are such criminals, man. What a bunch of scumbags. So that's it for today, for this week, my preview. You've got some dates, you've got hourly chart, you've got the daily chart, the weekly chart, the monthly chart. You know my take on the market. The market's going to get slam bammed and thank you ma'amed. Okay? It's not going to hit all-time highs. Not anytime soon. And we may, I'm not going to say never, but it may be years, and I'm serious, years before we get anywhere near that again. It may be more than 5 years. We'll see who wins the 2024 presidential election and whatever else is going on in the world. Okay? But before then, market's going down. Lots of opportunity for short side trades to make a lot of money. That's where I would trade. If I get time this week, I'll do the rest of all the other futures products. But this should give you a really good feel about my perspective and my opinion about where I think the S&P 500 is going. Take advantage of it. Talk to you all real soon again next time.